Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep. With your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day. Good morning, everybody. Welcome to this Monday edition of Benzinga's Pre-Market Prep. Spencer Israel, Dennis Dick, Joel Elconin here, but he's not, but he'll be back in just a second. He had to step away. We were trying to catch Joel's wife on the radio just now, but I think we may have missed it, guys. Anyway, hope you all had a great weekend. We're back. It's Monday. It's an exciting start to the week. It's the end of the quarter. Don't forget, we got a jobs number on Friday. Lots of stuff to talk about this morning. Big news for Monday morning, though, is out of the biotech sector. Big news on the gene editing front. Historic news, actually, on the gene editing front. We would talk about that. It's moving the whole healthcare sector this morning. We would talk about that. We would talk about Boeing. We would talk about the Russell Rebalance on Friday. I'm sure Dennis was getting down and dirty in some stocks at the close on Friday. He will tell us all about it on today's show. Two guests on the docket. First up, Tim Quast will join us as he does every Monday at 8:35 for Market Structure Mondays. And at 9, we'll have Matt Hammond from ipowarriors who will preview the week in IPOs. I know we have Krispy Kreme on the schedule this week. Before we proceed, go ahead and drop us a like if you can. We would greatly appreciate that. Smash the like, smash the subscribe. You know how you do. Here is Joel. And Joel, how are we doing this morning in the pre-market trading session?
Just up a tad. We're up a buck at 72.25. Little movement overnight. Crude down a dime at 73.95. Gold, that's down again. Hanging out too long under 1,800 here. Down 280 at 17.75. Let's call it just silver flat at 28.13. Excuse me, I wish it was 28.13. 26.13. Bitcoin rally overnight. Up 1840 at 34,000. That 35K level looming just like the 40K. And Ethereum's having a good morning. That's up $142. The futures, that is, at 2004.
Dennis, how was your Friday close? Was it fun?
It was interesting. It wasn't as many fireworks as you'd think. It looked like most of the action actually happened about 2 to 3 minutes before the close because there were some wicked, huge imbalances in different stocks, but most of them paired off in the last few seconds. Yeah. But if you look, like Alibaba for one, I've got 5 or 6 written down here that had big moves. Alibaba started ripping, had a huge buy imbalance. It started ripping with about 10 minutes to go, really. 225, you can see then 226, 227, 228. And I had the swing on. We knew I'm long in the long-term account, kept the long-term shares, but I had the swing on that I bought 3 days ago, 213. I'm like, I'm just going to throw this thing out there just under 230. And if it gets silly, I'm going to, I'm obviously going to get executed on. About 5-7 minutes later, that just kept ripping up and I actually got done. So I did sell out of my Alibaba swing. I tried shorting the stock too on that. It came in a little bit, but it's already kind of coming back up. So just, those are just short-term trades. And then you had UNH had another big move too. So if you bring up the chart of UNH, you can see it with about 5-7 minutes to go. The huge buy imbalance. People are like, "Oh, this thing's going to gap up huge." Went 404, 405, 406, 407, 408, 409. Went all the way up to almost 410. And then they pulled the rug out from under it. The imbalance flipped, and everybody got caught, and the thing actually gapped down. So, these things are funny. That's why, I'm always the liquidity provider into it. I bought on the close. I did get filled on a few names. I got long RIG, RIG on the close. But then that came out with some insider buying after hours, so I've already sold that. I basically have sold out of almost all my trades. Desktop Metals was another one. I bought that on the close. It was running down and gapping down, and it's already back up, so I've already flipped out of that too. They were pretty much all winners, the fade trade, but there wasn't a ton of fills, though. Like a lot of stocks, there was a lot of crickets, really, to be honest. Like of the deletes and of the ads, you can bring them up. Like, we talked Nikola was an ad. had Palantir getting added. There really wasn't much movement in those stocks at all. So it was random. There was a few movement. Monster Beverage, MNST, had a huge spike right before the close because it looked like it was going to gap up, but then that didn't happen. It went up to 95 and came back down to 92. So there was some good movement for the fade traders. Fade trade wins again on Russell Rebalance. It seems to always win on Russell Rebalance Day.
Yeah, some of those didn't sound like they were Russell Rebalance related, though.
Well, remember, it's just because they're adds and deletes, there's also adjustments, Joel. So you've got to think, some, are getting more shares to buy, to sell. So everything is still adjusting because the market caps, because they're all in there. So just because they're not an add or delete doesn't mean there's not buying or selling pressure from the indexers, because as, a market cap has moved up, they might have to buy more shares, or maybe, it's crowded and they have to sell more shares. So it's not always just the adds and deletes that are moving. Sometimes the mega caps are moving as well. And that's what we saw on Friday. We did see a lot of the mega caps moving. SoFi had a pretty big move too. I know we have a lot of SoFi traders, SOFI. That was getting hit all day, really. Yeah. And you can see that might have been news related as well, though. But what I had, the big movers, I had UNH had like a 6-7 point spike about 2 minutes before the close. Alibaba had a 5-point spike, which
we saw that
out of my swing, and that took me out of my swing. I was risking, 3 points, and I ended up making, I think, 17. So on that swing, so that one worked out really, really well. Again, I'm still long in the long-term account. Monster, MNST, Desktop Metals, Rig. Those were kind of the main ones that I had written down. I know there was probably some other ones. If anybody in the chat knows of some other big movers that were just spiking on the close. But it was kind of a quiet Russell Rebalance, to be honest.
GameStop, Dennis, GameStop.
Yeah. Oh, yeah. I had GameStop written down too. GME. It had a huge spike into the close. So if you look, actually, it was around $200 with 15 minutes to go, and it spiked $10. So that one was actually getting, I believe, added.
We did catch that one. We did. Yeah. We were trying to watch them on the 1 minute charts. Yeah. And it was just, and I separated all my charts and I made them all 1 minute, and it was like mishmash. It was really, you're right. Some of the moves were before. Yeah. Jean Sebastian is asking, Dennis, what exactly do you mean by providing liquidity? Dennis, I can handle it, but it's just when there's large imbalances and they advertise it, when they are large buy imbalance, they're looking for sellers, and when they're looking for a huge sell imbalance, they're looking for buyers. Yeah. They're looking for people. So if you want to give any more detail,
it's basically just fading the move more than anything. Like if you've got this huge spike, and it's exactly right, Joel. The reason they give these imbalances, the reason these are published on the floor at 350, it's actually. It's 350 for the New York Stock Exchange and for the NASDAQ now when this numbers come out. But like we've talked before, and we know you can get this information as early on the floor as 2 o'clock they start showing up, at least the New York ones. So everybody kind of gets a pretty good feel. But when you see a huge buy imbalance, that's advertising to traders out there. They're advertising on the floor saying, we've got a huge buyer here. We need some help, because the designated market maker on the floor doesn't want to take the other side of 1 million shares. So they are advertising it and saying, look, there's a big buy imbalance here. We need some short sellers. So those short sellers will come in and provide liquidity so the thing doesn't just gap up, enormously. The other side is true too. Let's use Rig as the example. Rig had a huge sell imbalance. So I'm like, okay, well, I'll provide liquidity into that. And how I do it is I use the LOC order, which is limit on close. So it's going to fill me on the closing print or it's not. And Rig had been drifting down. For the better part of the day. You can see, closed near the low of the day. So I threw out some shares to buy it. I think I was as high as like 448, and I had some different levels, and it didn't get executed on all, but I did get fill on one order at 444 at the close. So big sell imbalance. It's showing that. It's saying, hey, we've got huge sellers in here. We need some buyers. So I come in here with an LOC or saying, okay, I'll provide some liquidity. If it wants to gap down the close, I'm willing to take a chance that it's probably going to come back up after hours or into Monday, because these moves are often faded. So I put an LOC buy out there, limit on close buy. I think I had it at 448, one of my orders, and I got filled at 444. So like I said, Rick had, lucky, that's just kind of BS luck. There's a headline from the SEC filings where they had a buyer, some inside buying there, and the stock was already trading up. So I actually just flipped out of it at 465. I sold some late Friday night, and I sold the rest at 465 this morning.
And also, and I talk about this with on these imbalances, you're also advertising to people that are maybe long this stock. Like not necessarily wanting to
maybe they
be
wanna
an
sell.
evil short, selling into the imbalance. And that's why, when we look at these rebalances and what stocks going in and out, you never know how many large investors, big liquidity, right?
Yeah.
A big moment, price discovery at extreme levels that use that as well. But
And I
yeah,
mean, we're joking. Some people think you hear evil short, and if they're listening to the show for the first time, they think we're against
sorry
short
about
sellers. I'm
that.
a short
Yeah.
seller. That's a joke. We're all market makers. But the people on this show know short selling provides a very valuable service to the market. We're not talking about naked shorting. We're talking about just the regular short selling. The majority of your market's liquidity. And we can have, we're going to have, obviously, Tim come on here, and we can talk to him about that too. But short selling is an essential part to liquid markets. Without short selling, you wouldn't have liquidity, meaning you would have to pay a lot more to get your stock. So, and just the example, huge buy imbalance on the close for UNH. What happens is shorts come in, they offer liquidity there, and the stock doesn't gap up huge. So that buyer, that institutional buyer, or that index buyer that needs to buy doesn't have to pay for 25 for his shares. In the absence of short sellers, he would have to pay a lot more. He or she would have to pay a lot more. It doesn't gap up that much because you've got short sellers providing liquidity to the market. That's what short selling does, and that's why it's essential. And we saw that again back during the financial crisis when they got rid of short selling for 3 weeks, and there was no liquidity on the banks, and they were chopping up all over the place. They realized they made a mistake very quickly, and 3 weeks later they put short selling back on the financials because this is just screwing up the markets. Short selling is how market makers provide liquidity to the market.
That's right. All right, let's talk about the big news of the day here. It's on the CRISPR front. Let me show you the press release that came out actually over the weekend. It was Saturday morning. I'll bring it up on my screen here, okay? There's a lot of words here. I'm going to highlight the important ones for you, okay? Intellia Therapeutics, ticker NTLA. Let's just skip right to the quote here. The money quote at the top of the press release. These are the first ever clinical data suggesting that we can precisely edit target cells within the body to treat genetic disease with a single intravenous infusion of CRISPR. That's the money quote right there. They have some positive data. It's phase 1 data, so it's early yet, but still, as the CEO of Intellia says, it's the first ever data basically saying that we can do this. First time they've ever edited genes inside the body. In this case, it was the liver, and they edited some protein cells to stop producing protein, basically. And NTLA, Regeneron, those are who are working on the drug together, but there's also a bunch of CRISPR names, and they're all trading up this morning on this headline, or the news, I should say, that was published over the weekend in the New England Journal of Medicine.
There's just so many that are trading up. If I go to my up filter right now, the big up filter, and look, right at the top is NTLA, which we just talked about. But basically, the majority of the stocks in my up filter are gene editing stocks. RSLS, I don't follow that one, but I'm assuming it's probably gene therapy because it's trading up 20% unless it has its own headline. But like
Life Sciences,
Beam is up there. Yeah, Life Sciences. You've got Edit, EDIT trading up in the pre-market. CRISPR, which we've already talked about, is trading up 12% here in the pre-market. I mean, it's across the board. It's all the stocks that are trading, like 80% of them that are the ones that are trading up are, for the most part, gene therapy stocks. So there's a pile of them. So this whole sector is moving this morning. It's moving enough that the XBI is trading up substantially too. First thing I came in, I was like, whoa, XBI is up big. What, I'm thinking, what pharmaceutical company got taken over that it's up so much? But it's this whole gene therapy, obviously, that's making the stocks trade significantly higher. Because when you see SPY flat and XBI trading up 1.5%, you're like, okay, something's happening in pharma land.
All these charts look the same. They're all like just busting out. Yeah, but they're gapping up, but it looks like they're bid. I mean,
they're bid up here.
They're bid up here. So $58. I mean, the only thing you can do is just note the pre-market highs on these things and see if it takes it out. I mean, this thing is NTLA's doubled, current high 144. No,
what was the pre-market high?
144.
Oh, we're hanging up there.
So yeah,
not giving it back.
No, backed off $5. But man, that's nothing considering. It's had. You can see the last just been marching up since 115. So if you have some potential targets here, take it. If not, just let the baby run. What was the other one? You said CRSP?
Yeah, CRISPR's up big on this too,
CRISPR.
up 12%.
Yeah. Oh, I guess just watch your leader on this, Dennis. Wouldn't that be the?
Yeah.
They all
Yeah.
have their own individual characteristics. Is it bad for anybody? Spencer?
ALNY is trading down this morning. I think they're a competitor to Intelia, but
ANLY?
ALNY.
oh, I'm sorry, ALNY. Did I say that wrong? ALNY.
I trade
Yeah, I
it
was thinking of
once in a while.
Alany Capital. Yeah. Okay.
Yeah.
Go ahead.
No, so I
Ugh.
think they're a competitor to Intelia, which is why they're trading lower here. But that's the one. There aren't many.
Chat giving us some smaller ones. NVTA coming from Pratam in the chat. PACB. I mean, you're going to see a lot of little movement, and especially some of these smaller ones as well. I didn't see 20-30% movement, but everybody kind of jumping on the sympathy trade to a certain extent here. And this is what exactly does this drug do again? Like you read me, but it's so much. There's so much pharma talk in there.
Yeah. So essentially, what happened is they injected this drug into people who have this like protein disorder, transthyretin amyloidosis, which causes like nerve damage and things like that. And what the drug was able to do is it stopped the thing about this disorder is your cells just produce extra protein that blocks. Just screws things up, right? And this injection stopped these cells from producing the protein, the problematic protein in the first place, right? Inside the liver, right? So they essentially changed the cell's activity. So again,
sounds like it did what it was supposed to do.
It did what it's supposed to do, right? And again, first time it's ever been done inside of a human before.
Right. That's why this is so big for all these companies.
Right. And Chad, I saw somebody mention ARCG. There's a lot of ETFs, everyone.
Yeah.
There's a lot of these ETFs.
But this Kathy one, Genomic Revolution's going to benefit tremendously from this because she's got a lot of these stocks in her portfolio.
She has a few. I can give you a bunch more ETFs. A lot of them are not super liquid, so be careful. But obviously, we know ARCG is very liquid.
Yeah.
You can throw ARKK in there while you're at it because that also has CRISPR in it, I believe.
Yeah, it's up 2.5%.
The one that comes to mind is Genome, GNOM.
Yeah.
Right. That's a big one.
Yeah.
There's
it's trading up 4.3%.
Yeah. How's this one? Not super liquid. I'm trying to find like the more liquid ones. IDNA, the iShares Genomics Immunology Fund. I'm trying to find one that ones.
Yeah, these are those ones. Yeah. Some of these are very illiquid, so you got to be careful. Yeah. Like just all of a sudden paying up because you don't have the liquidity there. What that means is not short sellers, and they're helping to provide liquidity in some of these things.
So you can go broad and go like BBH, which is just the Van Eck Biotech ETF.
Right.
That one's got more volume, right?
Yeah.
Obviously, IBB, XBI. You guys know those.
Yeah.
Those are some of the larger ones, the more liquid ones that I can find. But there are a lot. There are a lot of them out there.
Yeah, some of the sympathy plays might be interesting, if you can get them on the cheap. But, when you got a stock gapping up 50% like NTLA, I never buy it. So I never chase up stocks. Some people make good money chasing stocks. Again, it's not my style. I don't like taking risk like that. When you're buying something at 47 points, it could give 10 points back in a heartbeat. And you're how do you control the risk? Where's your out? What are you saying? Where is my defined out? Maybe you're looking at a pre-market low or something. Maybe there's some different ways. But I kind of use what Joel was just saying is I use NTL as my leader to trade the other ones. So if NTLA is your leader, you leave that on your screen. If it starts rolling over, then some of these other ones might start rolling over too. So again, it's going to be just like with space, you can't always just fade everything. I thought, I said when space was $48 in the pre-market on Friday, I was like, I'd be ringing the register. It's up another $10 here. So, it's continued to go. I would still be ringing the register, but right now the story is hot again. I'm thinking space is going to stall out maybe at the all-time high at 62.80, but, it's hot as hell. Crazy
number up
headline there that, we probably knew was going to come eventually. is the driver here. But that's all that matters. And when a stock gets hot, it's all about story, and the space story is hot again.
What about what about halts in these things too, right?
You can get some, if the volatility, they get the limit up, limit down volatility halts.
Sure, for sure, won't there be some halts at NT? Well, I guess it's now stepped up, right? Because they'll do it based on the opening price, but there's still going to be.
There could be. When you kind of got a lot of price discovery, it's already happened here because you're not seeing this thing chop around 10% every 5 minutes, Joel, going into it.
They made up their mind.
And remember, so for the limit up, limit down halts, it's different. We can look up the rules and we can bring those up for you. I'm just going off my memory, but some stocks are 3%, some stocks are 5%. I think some stocks are 10%.
10%. That's what I was thinking. Yeah.
And that it's over a 5-minute period. So basically, what triggers these volatility halts, and we've never really talked about it, is if there's a sudden movement. So it's always cycling on 5 minutes. So if you get like if it's a 10%er stock, and it moves 10% in 5 minutes, they halt the stock for 5 minutes to allow liquidity providers and people to digest news, and then they reopen it. And what you see on some small caps sometimes is something comes out during the day and it wants to go up 50%. It quickly runs up 10, halts. Quickly runs up another 10, has to halt again. Quickly runs up another 10 and has to halt again, which is completely annoying. There's no volatility pauses during the pre-market. That's why you don't see the stuff. But during the regular session, there is. So when news breaks during the regular session, and it's major news, like if this NTLA news would have broke during the regular session, you would have seen it trade up, to the pause, and then trade up again to the pause, trade up again to the pause. And what that does is it really is just impeding price discovery. And I've argued when you have material news that they should widen those bands. I've said that to regulators as well. But it's tough. The purpose for the bands is to reduce volatility is really what it is. But when you have a news event, the volatility is warranted because this price wants to correct to where it wants to go.
Yeah, and then a lot of times you see limit up, halt, limit up, halt, limit up, halt. Limit down, halt, limit down, halt. A lot of times you get them when they get overdone. But the news came out. You're right. It looks like a very orderly market right now. Considering how much the move was. Don't know what the short interest in this. So if you're short and stuff, and then if there's anything, biotechs, man, you don't know. You just don't know. And this is exactly what can happen. Good trials, whatever, and the results. But right now, you got an orderly market. I'll just go back over the last hour, and I could say 15 minutes support at 135 and resistance at 144. So let's see what it can do in between that.
And then the fact that you guys both noted that there are bids, like these stocks are all ripping here, and there are bids still. Right.
Oh yeah, this isn't just a one-off. This is like now, people investors are looking at this as new news, and they're coming in, and it's fairly tight. I'm looking at NTLA 137.50, 138 to 139. It's 40-50 cents wide. The thing just went $49. You want to get out of some stock, you can. It is, fairly illiquid,
that's
but
a good market.
Yeah, there's some liquidity in there. If you need to get out, you can get out.
Okay.
Wild. What's the trade already, NTLA? Let's look at the volume. It's already traded 1 million shares.
1 million shares, yeah.
That's probably a typical day for that stock.
Yep, exactly right. Okay, so that is your big news of the day in the biotech healthcare land. There really isn't that much else going on this morning. There's a few stocks in chat that I promise we will get to at one point or another during this hour. I wanted to look at Tesla real quickly just because they announced another recall. Actually, no, this might be the same recall. They've been having some problems in China for a minute here, and it might be just a continuation of the same headline. I think.
Well, somebody in the chat was pointing out that whenever I say sell, it's usually good for another day. Well, that wasn't the case in Tesla because I said I would sell it just under that 700. So I got the top. I called the top almost perfectly on this one. So there's an example of when I'm not always.
Don't waste your time with them.
Anyways, okay. So there's always the haters, right?
Yeah,
so
I don't know.
Haters 700. We talked
I don't even know why they're in
Mitch
here.
was listening to the show. He sold his Tesla in the 690s like a good boy because he's listening to the show.
Good boy.
It's
I'm a good boy.
670. Mitch, that was nice. The perfect entry and the perfect exit. Mitch almost had the perfect trade on that Tesla. He got in at 606 and he sold at 690.
We're gonna get it back down to 630. We're gonna get it back down at 630. And guess what?
I think you've got major resistance up there at 700. I don't know if you're gonna get down all the way to 630, but I think it could see 650. So I do think you've got sellers now lining up that are like, "Ooh, did I miss my out?" So I don't think it's this easy sailing right through 700 here, but it has pulled back $30. Around 650, it starts to get a little more interesting. The 50% retracement of this recent move. So I don't know.
Easy, maybe get a gap fill here. First things first. I mean, you had the gap up. You got a gap between 67.61 and 57.20. So I think anybody that got caught in that little gap up day on Thursday. I mean, how many times do you see it? I mean, it'll fill the gap, it'll come back. It finally filled the gap, small gaps on the upside that it had, and then you work your way into that bar. But first things first for today, support. I call it support, and it's $13 away from there too, and it's only down $1.37 on this news, so it's not exactly like people are rushing for the exits. The only thing that's a little different is where on Wednesday and Thursday, and also for part of Friday, you were selling in strength, right? Which is much easier to get those offers lifted, as opposed like right now you could be a little bit. Maybe people got, oh man, I can't believe I bought that near 700 on Thursday, and a little bit of selling on weakness. But I like that 657.10 number on the downside in Tesla.
Real fast, Scarjo Rabbit said in Europe we can buy the VanEck Bitcoin Ethereum ETNs. Could you explain an ETN to a dummy? Essentially, an ETN is like an ETF, but with a bond component to it. The biggest thing about an ETN that you got to know is that you are subject to the credit worthiness of the underlying bank that provides the ETN, right? So ETNs are liable to blow up because if the underlying bank, their credit gets downgraded or whatever, then your ETN might be in trouble. But other than that, they're basically the same.
You got a credit risk involved.
Right. There's credit risk. But other than the credit risk, and maybe some
you don't see very many of them blow up, though. So it's not common.
No, it's not common, but it
can happen.
It can happen, right? Yeah. Okay. And then what about Boeing here this morning? Because Boeing had another headline. The FAA said that it would be at least the middle of next year when Boeing will get the approval for the 777X was what they're trying to get approval for certification, and it won't be before the middle of next year is what the FAA said.
The reopening trade has been on pause here for about a month. I mean, it just got overdone, and it's pulled in. Like I said recently, I've been trying to add some of the reopening stocks. Boeing is interesting to me as well. But I was looking at American Airlines at this 22 level that just is holding.
Is this still holding there?
Yeah, but it's been here too long now. So I tried to buy it on like day 2 and I didn't get filled. And now it's like I could get it right here, but because it's been here 6-7 days, it makes me look like it's almost consolidation to go lower at this point in time. They don't like it to allow you to buy the bottom 7 days in a row. If it's making 7-day lows all in the same area, usually it eventually takes it out. You might get a cut through rally trick like the Gil Morales, but or what's he called? I call it the cut through and rally, but he was
undercut.
The undercut and rally. I'm going to get that wrong forever now. I guess I missed my window period for that, but 21.84, 21.82. I mean, you do have a stop out there on American Airlines, and it's holding well. Support is support until it's broken, but when it hangs out here for 6-7 days, it makes me think that it's probably going to cut through it just to stop out everybody who's leaning on it.
Yeah, they're canceling flights too. They did it last week, and then they talked about cutting 1% of their flights in July. I think it was staffing and maintenance issues. So I think that put a little crimp. I sure hope my flight coming up next month is not in that 1%. But 22, he mentioned that the stock we were talking about was Boeing, and that's trading near the lows of the pre-market session. Boy, this is a tough one. Looks like it's rolling over once again, but you can only use shorter term targets. It has not taken out. There's 2 lows in the 243 handle. That's still $2 away, so they don't seem to be too scared of that news. So split those, call it 43.5. Haven't even come anywhere near that. On the upside, I'm sure a lot of people would like to see that close of 48.38. And also last week's high that came on Friday at 52.30. So not a big reaction to the news, but that seems like a long time, not till the middle of 22. But
Yeah.
Boeing is shrugged off bad news before. Let's see, it can do it again today. S&P's just creeping up near the high of the session here. We're up 4.5 handles, 75.75. We did make a new high overnight at 78.75 or 78.5. So that's our target on the upside. I mean, we've come this far, this fast, but maybe think about 4,300. We do have the end of the quarter on Wednesday, so dressing up and dressing down your portfolios, and then jobs number on Friday ahead of a 3-day weekend. Not much on the earnings front.
Let's take a brief pause here, Dennis. I got to ask you about this. I'm not sure. Maybe you can help us understand what this picture is here. This is from a press release this morning from Cheetos. Leaves. How do you pronounce the word? Is it foyers?
I don't speak French. Even though everybody thinks Canadians.
These are maple leaf shaped Cheetos that also taste like ketchup.
Canadian Cheetos.
And
that's kind of cool. Ketchup. This is for Canada today, I would assume.
Should I be going long Pepsi on this or what?
I don't know if the maple leaf ketchup treat Cheetos, but those are cool. Canada Day coming up in a couple days, so it's exciting. So I'm assuming that's what they've got these ketchup Cheetos for, and the Canadian flags for Canada Day.
You have no into this.
You want to buy Pepsi on this? I want to short it on this.
On half Canadian.
Who the hell's going to eat those?
He's half Canadian, Joel, and he likes to pretend he's not.
No, I'm just making fun of Pepsi.
I think these are awesome. That's cool. I mean, they're trying stuff, right? So,
yeah,
patriotic Cheetos.
I know the word is French. I just don't know how to pronounce it. That's why.
Well, it obviously mean leaves.
Yeah.
So I don't get the leaves part. Oh, I guess because these are. Why would it's a Canadian flag? It's not really a leaf. I guess it is.
It's a maple leaf. Looks like.
Yeah, I know, but why don't you call it like they're trying to go on the Canadian flag? So I would just set July 1st Cheetos ketchup.
Are they trying to co-opt your culture, your Canadian culture?
I guess these are all through the States too, though. So
I don't know. Anyway, I just saw Luke saw the press release this morning.
That's cool.
He thought it was funny.
I'll go buy a pack.
Yeah,
tell you how they are.
Yeah, tell us how they are.
Yeah, red and orange fingers then, instead of just orange from the Cheetos.
Joel calling it how it is. My kids are just going to be like a rainbow. Their face with the red and the orange and all the other.
All right, let's do one from.
I love ketchup chips. I agree with the chat. John, ketchup chips are the best.
Oh, it's pronounced foyer. Thank you.
Foyer. There you go. Foyer.
Thank you,
ask the Canadian how to speak French, and he doesn't know how. Not a real Canadian. But the Habs are, Stanley Cup Finals start tonight.
Oh, man.
Montreal Canadiens.
Big week for you, huh?
Not really, because I'm an Oilers fan, and I'm one of those Oiler fans that, well, if the Oilers can't win, I don't want anybody else to win either, so I don't really care. So I know we should care because the Canadian team hasn't won the Stanley Cup since 1993, when Montreal won it last, but 27
We don't
years.
worry about that, Dennis. It's all about the Lightning. Get it right.
They're going to have a real rough time with the Lightning. There's no doubt. Let's just put, I know there's some Canadians in the chat here, but this Montreal team has kind of figured out the playoffs, but they're riding Price a little bit too. This was not a good team in the regular session. The team was 24-32. Wow. They had a lot of overtime losses that got them into the playoffs. They were just limping in. But you know what? They're playing as a team. They're playing the style they need to win. And, they're forechecking like crazy. I know it's not a hockey show, but Price is playing really well. Price is looking like he's 25 years old again, right in his prime. So if Price, can put up the .950 save percentage, they got a chance.
Hey,
that's what's gonna take, though.
They say Price doesn't lie. Okay.
Yeah, I knew
Price don't lie.
Price don't lie.
Price don't lie.
I don't even know who he is.
Come on, Carey Price, one of the best goaltenders.
But he doesn't lie.
Carey Price. Did he take over? Who's the backup? Patrick Waugh?
Yeah, he's the backup.
Joel's kicking us back to the 80s, but yeah. Carey Price, excellent goalie. Montreal, let's go. We'll cheer for them though. Let's go Canadians, but I don't think they're going to beat the Lightning.
All right, let's bring on Tim Quast, the founder and CEO of Market Structure Edge for Market Structure Mondays. Tim, good morning, sir.
Good morning, guys. Boy, you cover it all. Now today is hockey.
Yeah,
It's that's
Stanley Cup Finals.
Wide, diverse base of knowledge in this
Ketchup
group.
chips,
ketchup Cheetos, stock.
we talk it all.
Yeah. Anyway,
and then we bring on you for our market structure expertise. What's up?
It's another Monday followed by a weekend in Steamboat Springs, where yesterday afternoon a bear walked across the river in downtown Steamboat Springs, and you just never know what you're gonna see. And unlike much of the country, it's been chilly and wet in Steamboat the last few days. It was maybe 65 degrees yesterday, and so this bear was very reticent to step into the water, but the bear crosses the river, and there are 10 or 15 people watching. I got some good video of it, and the river is the Yampa River. And here's the funny part: so the bear, is not bothered at all by any of us watching him cross the river, and he comes up the other side, and then one of the young local gendarmes pulled up in a police car and got out, and the bear went, "Cops!" and took off running. So even the bear knows that it's all fun and games until the police show up. So
the bear is running from the cops. He's not bothered by anybody else, but the police show up and he's out of here.
That's it. Yeah, it was
I thought bears were extinct. I thought they were
in this market.
Yeah, right. They are when it comes to market structure. That's absolutely right. But they're alive and well and roaming about in Steamboat. So that's good, I guess.
You let us know if they start to come out in numbers here, and we'll start to really to really lighten up our portfolio.
Tim, I saw that you wanted to talk about. I saw your email and stuff, and I don't want you to have to stoop too low for the content on our show for our audience or anything. So, but go ahead, take it away with your research.
And by the way, I did a Benzinga boot camp over the weekend.
Yeah, I was going to mention that. Nice job.
Thank you very much. Well, don't let it get back to Andrew Lebos, but we had well over 100 people subscribe to Market Structure Edge through that.
Nice.
So I hope something was beneficial out of that, and I'll hit a couple of things later in the program about that, but because I want to break some news here.
Ooh, we like breaking news.
On Benzinga pre-market prep.
We love breaking news.
Which I don't think anyone has figured out. Not that we're, it's not that we're geniuses, but we know a lot about market structure, and we spend a lot of time looking at the data. The big thing last week, Joel, to answer your question about where things are, it was, of course, the conclusion of the Russell rebalances. So for those who are fairly new to the markets, there are index rebalances that occur periodically. The S&P, Standard & Poor's, Dow Jones, S&P is a combination now. They will generally do quarterly rebalances. So those occurred a week ago, June 18th. Then MSCI will do periodic rebalances, and then you have FTSE Russell. So the London Stock Exchange owns the Russell indices now. But when you put these groups together, plus the NASDAQ and some others, but people don't realize this, there are over 2 million global index products, and those things rebalance. And so it's crazy, right? There are way more indexes than there are underlying products, which tells you that there's a lot of overlap. So with the U.S. Equity market now very near 50 trillion in market cap, when you rebalance those instruments, it's a big deal. And in the Russells, the cutoff now, this is the thing that I found extraordinary, that the cutoff between the Russell 1000, and it's a simple market cap index, folks. They just rank the top 1,000. So to make it into the top 1,000, you have to have market cap of 5.2 billion. So, which was a 73% increase from 2020, by the way, when the bar was about 3 billion.
Oh,
isn't that something? Yeah, it's really something. So that's where the money is. About 95% of market cap is in the Russell 1000.
Right.
And the Russell 2000 is only about 5%, give or take. You know, that can fluctuate, but about 5% of market cap. And of course, we've got 4 companies that have $1 trillion of market cap now. So Google joined that group, but Amazon, Microsoft, and Apple. Facebook, by the way, is closing in $968 or so billion. That means if they add $12 a share, they're in that group. If, you know, at a price of about 341.5 right now. So it's just interesting that almost $5 trillion of market cap is in 5 stocks. And what does this mean to you traders? Well, it's what we talked about on, we always talk about this, that it's about supply and demand, that stocks move on the basis of supply and demand. So you want to know where these things reside. And there are a couple of the so-called meme stocks that the Reddit mob has chased. And I hope some of you folks are listening to the Benzinga Pre-Market Prep show, because you'll learn more about how things work. So AMC did not make it into the Russell 1000, even though its market cap is 27 billion and the cutoff is 5.2 billion. And you would say, well, how could that be? Why would AMC be excluded? Well, because they benchmarked it. Most people don't realize this. They benchmarked May 7, and they change that date every year. And then there proceeds a period of rebalance activity. A lot of that occurs in the month of June, because they don't want to cause big ripples in the marketplace. And so GameStop made it, because its market cap at May 7 was above 5.2 billion. And AMC's was 4.8 billion. Interestingly, and you look at AMC, it went from $2.01 per share to start the year to $54.06 where it closed Friday, a gain of 2,590%, and yet it's still in the Russell 2000. So all of this stuff, folks, it's important to understand the market that you're going to trade in. You ought to know. And about $11 trillion of assets had to reshuffle. That's all the money pegged to these indices to reflect how the indexes are now comprised. And it's just really interesting. I want to show you something. Actually, I'm going to share my screen.
Hey, Tim, just before you do that, so they don't care if companies make money, right? I mean, basically,
right.
What it's I mean, so
it's
to
all
me,
based on market cap.
It's all based on market cap. So like,
Correct.
I was looking at some of these companies, and we were going through them, and I mean, you know, I don't want to be like an S&P snob or anything, but I mean, some of these companies are just horrible, and they're never going to make money. A lot of them, I mean, do companies ever like come in one quarter and then go out the next quarter? I mean, I looked at
all
like
the time.
Well,
in the yearly,
not
yearly.
in the yearly. I mean,
rebalance.
I don't know. I mean, how much faith can I don't know. I that's just me. I mean, I know S&P has their criteria, making money 4 quarters in a row. So there's no criteria that all market cap.
Market cap.
Wow.
All market cap. Well, and you're
shaking my head.
Joel, it's a very good point, but it goes back to the changing nature of the equity market. You know, if you go back to when I started when I started in this profession back in the 1800s, because I'm getting old.
Are you older than Joel? I thought everybody was older than Joel.
So 1995, you know, in 1995, 90% of assets under management at institutional firms were actively managed, meaning they were considering the things, Joel, that you're talking about. There was a distinct focus on whether businesses were performing well, and that you would look at revenue and margins and net income. That's the stack, and all the other factors that come into play, your return on invested capital, your return on assets, all those sorts of things. But that considers stocks to be stories. Today, stocks are also products. There is a product that people need. If I'm running a target date, a 2040 target date fund that has a mix of bonds and equities and so on, what I care about is a product that will deliver me a return relative to a benchmark. Maybe it's the S&P 500. And how those companies perform is far less significant than whether those instruments that I want to own are properly tracking a benchmark. That becomes the the sole consideration for an index investor. An index investor does not care how a company performs financially. They care whether this stock is within 2% of the benchmark. I want no more than 2% variance. By the way, that's about what intraday volatility is. And the more volatile something is, the less helpful it is to me as an index investor, because it will vary from the index, and I want to track the benchmark. And that, Joel, is why the market cap becomes more significant than underlying fundamental performance. The more of that product I can get, the better. And the market craves them. This is why we tell public companies on the corporate side of our business, you need to figure out how to get yourself over that bar. Why? Well, if you're going to be a public company, your job is to create shareholder value. And that doesn't mean telling your story to more investors. It means making your product appealing to what the money is doing. And so if you have 500 million in market cap, you need to figure out how to create 5 billion in market cap by deploying shareholder assets effectively. And you need to think about being a product, not a story. That's the reality. Do I like it? I don't know. It is what the money's doing, right? And so traders, you have to know that too. It's your job to understand how the market works.
I mean, ETFs are a driver. We've had this conversation with you too, Tim. I mean, they're the driver for everything, even to our trading is to a certain extent at Bright Trading. There's a lot of traders that are doing ETF arbitrage. And I mean, you've just got to know. And, you know, we look at these Russell days and we see these wicked moves, we fade them because they typically are going to come back in, you know, because the ETF's got to move enough too. There's some opportunities even on those closes. But I mean, ETFs are driving everything. You know, and even in the extreme example where I've looked at, you know, on these big days where you got Facebook gapping up, but the Qs aren't up that much. And then they got to slam CSX and they got to slam the non-tech component of the Qs to try to make up for the difference. You know, it's kind of messed up to think, oh yeah, CSX was up because Facebook was up. Facebook was up too much, so CSX was down because of that. The media would never talk about that, but that's the ETF effects.
You are absolutely right, and we track that data too. Here, I'll give you 3 interesting data points around that.
Cool.
So if we look at the 11 sector ETFs year to date versus the composite stocks that make up those 11 sectors, the average stock is up 19%. The average sector ETF is up 20%. But the average variance, the standard deviation between those two, standard deviation, by the way, is 200 basis points between stocks and ETFs. But the average spread is 12%. Where it really stands out is staples. Consumer staples is way out of whack. So here's an arbitrage trade, people, if you want to look at the ETF versus the stocks. The average Staples stock is up 18.8% year to date, and the Staples ETF from State Street's up 7.4%. All right, what is going on? Well, their basket is wrong. Exactly. So there's a huge arbitrage opportunity just week over week. So you back up 2 weeks ago, remember, people forget the stock market was down about 3%. And so then it recovered 3% last week, roughly. But ETFs only recovered 2.4%. Yet another arbitrage trade. And I'm telling you, folks, the market makers run very sophisticated models, and they're very aware of where those gaps are. And it will influence what they do, just like you do, Dennis. You're gonna, you're gonna know where the gaps are and where the opportunities are. And that becomes a principal pursuit of the marketplace. And traders, this is why we created Market Structure Edge. You can go there, marketstructureedge.com. We did this to arm you with that same data that the market makers are going to use, that, the Citadels and Virtus and Two Sigmas and Quant Labs and Infiniums and GTSs of the world, maybe names that you've not heard of, but they're very successful. Jane Street, perhaps the most successful high-speed trader and ETF market maker ever right now. And names you've never heard of. Well, they're doing that. They understand these things that we're talking about right here.
Tim, before we let you go, what was the news you wanted to break? And if you had it, because I'm about to. If you're going to do it, I've got a little.
Okay, so you need the little drum roll ahead of
right.
Breaking news here on the Benzinga Pre-Market Prep Show.
Yeah.
And it's this. There is a belief among the Reddit mob that the reason you can get stocks like GameStop and AMC and pick Clover Health, pick your thing, can move is because of short interest. It's a false correlation. Has nothing to do with it. It doesn't matter with this, whether there's high short interest or low short interest. What matters is whether there is supply in the market or not. And short interest does not determine that. Shorting is supply. So the absence of it is what creates movement in stocks. And those are the rules. I went through this with the boot camp folks.
This is right.
I took them right through. So you could apply it to anything. I'll even show you. So here, I'm going to pull up the Benzinga June 28 portfolio. This is for today, and I talked about this on the boot camp, that the reason stocks move is because market makers must create shares to meet a surge in demand. I read the language straight from the SEC. I'm not making this stuff up. All right, the regulators want a continuous auction market of 100 shares at the bid, 100 shares at the offer. And what if they don't exist? I explained that if GameStop's shareholders own 100% of the outstanding stock and they neither buy nor sell, how is it possible for the stock to move? Well, because market makers manufacture stock, not because they can, but because the regulators require it. They must fill trades with stock. Well, they don't have to locate shares to short, they just create it. And that's how stocks rise. So let's take Abraxas Peak Corp right here. Here's a little energy company that is 50% short. And here's how it moves. When there is no supply, see this trend line here? When short volume drops below the trend line, the stock's gonna move. It has nothing to do with short interest. When the short volume moves above the trend line, now there's more supply and demand can't increase anymore, the stock's going to go down. And it did not rise further than here. And then it will happen again. Short volume drops below trend, price rises. For short volume rises above trend, price falls. And that's what happens. That's how it's all about supply and demand. So traders, knowing this information, you can use it to your advantage. And market structure edge mob, I hope you use it to your advantage. I'm not saying that, look, this is a very illiquid stock. It only trades, and we measure this, it only trades, look at this. So it's 2.6, trend up, 50% short. It only trades $788 at a time. That's very risky. It'll create a lot of movement. Look at GameStop above that. It's 10 times more liquid than is AXAS, because it trades almost $9,000 at a time. Isn't that interesting? It's become a fairly liquid stock. But these are things you should know. You can't, and they're the rules. The rules say market makers are going to have to manufacture stock. So if I try to buy something, for instance, I traded Virgin Galactic last week, made 15% on it, and I did it purely because of market structure. I didn't do it for any other reason. I don't gamble. I look at the supply and demand and I said, well, so supply is stable and demand's rising. What will the price do? It will rise. And so, but my trade, I bought 100 shares. That's it. And it split into 2 trades, both of them executed in dark pools. That told me immediately there's no supply in the market. I couldn't even fill 100 shares. And I showed my Interactive Brokers account to the folks at the boot camp, but to show that that's how that trade executed. And that is your breaking news. It is all about supply and demand. Short interest is a 1974 measure. It has nothing to do with it. It's a false correlation.
Tim Quast is the founder and CEO of Market Structure Edge. You can always learn more about what he's saying on that platform. Tim, always a pleasure. Thanks a lot.
Good to see you guys. I'll keep an eye out for bears.
Yeah, you do that.
We're looking for them. There isn't a lot to be found around here, and at least not in the New York market, I'll tell you that much.
I agree, and I think it may be a good week. There could be a little turbulence June 30, because that's the end of the quarter, end of the month. There's a big futures contract that expires, but otherwise the data say the market continues to rise. There's no question.
Jobs number on Friday, too.
Exactly. Yep.
Right.
Yep. Have a good one, guys. Good to see you.
All right. Let's do. Why are you?
I just want to add to Tim's point there, and it is all about liquidity. He's absolutely right. I mean, what really makes these things self-fulfilling to a certain extent when they start talking short squeeze is that you have you know, no, you have the majority of traders when they start hearing about a potential squeeze saying, I'm not shorting this thing. So you're losing liquidity on the sell side. So if liquidity is actually dropping, you know, and you don't have any willing sellers to provide liquidity, the rise in demand will just push the price higher. So just that fear that, you know, and like me, like I normally short stocks. Would I short AMC? Hell no. I'm not shorting AMC because they get run over in something like that. You know, there's market makers that have an obligation to come in, and maybe they're going to have to manufacture the shares like Tim is saying that they have to, and they have the 35 days, which we've talked about before. But, you know, the majority of your liquidity providers might just say, nah, I don't have an obligation to short AMC. Why am I going to get run over in that thing? So liquidity on the sell side dries up. You don't have the sellers, and you have a number of increased buyers. Price is going to rise. So he's right. So it's all to do with market mechanics. But when they start talking short squeeze, it's the absence of shorts that probably drives the price even higher. I think that's the point Tim was trying to make.
Yep.
And which he did well.
All right. I'm not really sure why the chat keeps asking about Caterpillar. I didn't see any news. It's not even really moving. It's up like 60 cents this morning. It's not really moving. Maybe you guys saw something.
I don't see anything.
But I don't know why there's been like a bunch of people asking about Caterpillar. So
well, I mean, the stocks come off significantly. We've seen this rotation, which we've talked about in the last month. It's been rotation back into tech, back into growth tech, and out of the cyclicals, and out of, you know, the banks, and, you know, we've seen this trade happening. So all that stuff seems to move together. It's another day this morning where tech is outperforming here once again. I mean, you can bring up the QQQs and it's up. It's starting to come in a little bit from where it was an hour ago, but tech's still very much outperforming today. And you seem to have these days where it's not like everything is going up and everything is going down. It seems like, you know, and we know the DI diamonds, when you look at the DIA and you look at the Dow, there's a lot of cyclicals. There's a lot of non-tech in that. So, you know, you can quickly look and say, oh, NASDAQ's up, Dow's down. It's one of those growthy tech days. So that's what we're seeing here this morning. Again, these do cycle and they change intraday. Right now, it's kind of more of a tech day still, but that's been coming in the last hour. But I watch these rotations. It's how I make my money, is watching rotation. And Caterpillar has been out of favor here. It's got a nice little, you know, rally the last few days, but then it had an ugly candle on the Russell day. Again, Russell days, there's a lot of factors rebalancing happening there where you got to kind of look at those days just as one-offs. But you got to be careful when the rotation starts to go the other way. I mean, everybody thought Caterpillar, you know, if we go a month ago, was breaking out to new highs, and it failed. And then, you know, obviously we've sold off significantly, talking about not a small sell-off, 246 down to 206, 40 points. You're talking about 20% sell-off Caterpillar had in the better part of 2 weeks. So now you get a little bounce. Bag holders all over the place in Caterpillar from 220 to 230. So it's tough to just go right back up because you have everybody who bought in March, April, May, June, hoping to get their money back. And if it gets up in that 225, 230, there's willing sellers up there. That's what we call about the overhead supply. So the stock actually, probably this was a counter trend rally that I think is to be sold. Now, just from a technical basis, you know, you think, okay, maybe you can get up to the 50% retracement, which you put in the 225 area. But, you know, we stalled out and put a double top there, 221, makes me not want to be long this unless we start to break out over 221. There's your Caterpillar analysis. Joel's holding off on that.
No, he did it. No, he did good. He did a good job on that one.
Well, throw the next one in, Joel.
Yeah, no, I just wanted to real quick. I just want to take a look at NTLA. That's the hot stock of the day, and yeah, not much. I mean, 137. I mean, also another thing you get here is, you know, I don't, like we said, we didn't look up the short interest on that, but for the last hour or so, we've been holding 137, and if you want more continuation through that pre-market high, take a look at 144. S&P's just creeping up near the high of the session, 78.50. We're currently trading at 77.50. So I'm going to hop off here, go to premarketprep.com. I got a lot of stocks to cover there, and I'll let you guys take it from here. And Spencer, I'll see you at 3:30.
All right. And we got Matt Hammond here from IPO Warriors. It's big week in IPO week in IPO land. We got Krispy Kreme coming back to the markets. I know Dennis is excited for that one. So,
what's the symbol going to be? Same one?
I don't know. Matt Hammond, let's bring you on here. What's the Krispy Kreme symbol?
D-nut.
D-nut. It makes.
Oh, that's a
perfect
better
sense.
symbol. That's a better symbol.
Who wants some donuts?
What was it last time? It was like something with a K, right? It was
KKD, wasn't it?
KD.
Yeah, I think it.
Yeah.
No, I think it
KD or
was KKD.
something.
KKD.
Yeah.
I thought it was KKD, but I
That
forgot.
sounds right. That sounds right. All right. Thanks a lot, Dennis. Talk to you
Yeah, I
later.
gotta hop off, Matt.
All right.
I'll be listening.
All right,
Hey, guys.
Matt,
Thanks.
what do we got? What do we got in IPO land this week besides Krispy Kreme?
We have a ton of IPOs. We have about 21 on the slate, and we had a huge week last week. I had one of my kind of banner weeks. It was, almost impossible to lose money. Did manage to make one bad kind of bag holding one with MF, which was just a bad MF. That was Miss Fresh. It was a Chinese IPO in the grocery delivery sector, which I guess they made a big retail allocation to all their customers in China, and a lot of them panic sold. So I think we'll be all right. It's way below the IPO price. It debuted way below the IPO price and then traded down from there. So it only has to come back $1 for to get us bag holders out. So not panicking, but otherwise we had a ton of wins. So since we have so much, quickly, how was your weekend, Spencer?
It was fantastic. Normal weekend. Got to go outside. It's pretty hot out there. It's pretty hot.
Yeah, we had a warm summer weekend here out in Kiev, Ukraine as well. But not a whole lot of time to enjoy it because I was preparing for this big week coming up. All right. Last week, we had 30% win opportunity in Sprinkler. It debuted below the IPO price, which was a little bit surprising, given that the market wasn't particularly weak and this name had some Twitter buzz around it. Once it debuted below the IPO, the Twitter buzz got even bigger, and it ended up climbing pretty high relative to the debut. Bond Natural, this was kind of one of those semi-stealth IPOs. I sent it out in the midweek newsletter. If you go to ipowarriors.com, sign up for the newsletter, you'll get these signals. It wasn't on the calendar last Monday. It got added like midday Monday. And this one went up through 3 halts. It was a great profit opportunity. Miro Matrix, Biotech, didn't have time to play it because I was playing Bond and Docs. But it makes lab-grown organs, or is just kind of in the early stages of it. The hype and the low float kind of built up throughout the day, and it gave you a nice win opportunity. Doximity, this was kind of just this was the home run pitch. The pitcher just grooved this one, and we're all sitting on our back legs just waiting to nail this one, and it delivered 35% win op. It's still going up in pre-market today. This was just exactly what you're looking for. You go all in on this kind of IPO. We'll look at that one in a second. Accurix, this one again was a low float. Biotech in the with a good story. It's a new approach to treating infections. And then Alpha Technova continued the low float. This low float IPO trend starts to catch wind on Twitter every kind of few weeks. And when we have a hot market, people start just liking that it has a low float, that it's profitable, that it has a good story. And all of these have moved. So I'm going to be keeping an eye on those this week, along with some of the other blockbuster names that we have. But when the market's hot, IPOs are pretty good, especially right now. The IPOs aren't debuting at ridiculous premiums like they were a year ago. And, people are not shy when the market's good. People feel like going in and moving on these. And just like what you guys were talking about a moment ago, with IPOs, you have no short sellers because there's no shares available to sell. I can't go on E-Trade and short sell any of these IPOs, for at least a few days after they start trading. So you've got no short sellers. And when demand shows up, it's very easy for demand to outstrip supply. And that dynamic is going to cause share prices to go up. And you guys were just talking about that a moment ago with the previous guest. And it applies to these hot IPOs. That's what we're looking for. We're looking for situations where the demand is likely to outstrip supply. And that's why when you have a low float IPO, you got no short sellers anyway, there's a very good chance that the share price is going to go up. Really quickly, this is CXM. We saw it was priced at the IPO price was 16, which is up here. And then the debut price was 14.60. Everybody saw this and said, wait, this isn't a bad company. 9 out of the 10 top tech companies in the world use it. 9 out of the 10 top financial companies use it. half of the Fortune 100 companies are using it. It can't be that bad. So people piled in, they sent it up to a first spike, went up to a second spike. If you sold on either of these, congratulations. If you really held all the way through, you really, must have had some high conviction on this. But this offered you nothing but win opportunities and was a solid play. Bond, this was the low float Chinese semi-stealth. It wasn't very well publicized. It kind of showed up a day before the IPO. It does something like fragrance extracts or something like that for perfume companies. Opened at 630 and just pretty much went straight into 3 halts. My strategy on these is to be taking out my position out of each halt. You don't know which one's going to be the top one. As soon as it starts to come down, you want to be, clearing everything out. Yeah, you can wait for this possible retracement, but the best play is just don't get stuck in, what these ultimately usually become, which is, below the IPO price. So take your money on the halts up, look for these low float, semi-stealth plays, and take your quick profits and move on. I like these. You don't have to sit around all day. It's 30 minutes here, 10-minute halt, 10-minute halt, 10-minute halt. You've taken a 20-30% win. Mirror Matrix, this was the one I just talked about. They grow livers and kidneys, or they're aiming to, in labs. It gave you the dollar discount on the drop from 12 down to 11. From right there, though, the low float kicked in and it came all the way up to 1652. So win opportunities all over the board. I don't like to sell for a loss on the first 2 days. There's such a good chance for a rebound that this one, if you did play it, you should have made money. Docs, this is the one we talked about. This was Doximity. They have 80% of the physicians in America are using this. I think, Spencer, you talked about this. You guys had the CFO or the CEO on. I think. Yeah, I think you mentioned, was it you that said your wife's a doctor and she even knew this one was coming up?
Joel.
Yeah. So when I start hearing that from people like, when they're average, they're probably not even retail investors, but they're wealthy, individuals, doctors make money, and they were given allocations. They likely held them. So you didn't have a super high float to begin with. I think it was 23 million shares. You had a lot of wealthy professionals wanting to buy into it. It has a strong market share. It's profitable, plus growth, plus name brand, plus a lowish float. This had everything lined up to be a home run play. And then it opened up at 41.17, went straight up into this first peak. If you took profits there, okay, great. There's nothing wrong with being eager to make money. You didn't lose money. Came back down, didn't touch the bottom, which I like to see just because it feels like, okay, well, I got the best price possible. And then from there, it pretty much just took off as we expected. I had originally planned to hold for day 2, but I had sort of a mental target in my mind that if it got to 50, I would take profits. And when I got that opportunity on day 1, I bought over 1,000 shares. So locking in over, a $10,000 win in a day of trading on something, it feels really good. You go into the evening, relaxed, and you feel like you made your money. You're not going to maximize every trade, but you want to take profits when you see them. AXCP, this was a Network One financial stock, which we've seen Bosted and Network One both deliver kind of low float IPOs that have climbed up. So people sort of key in on that. And this one definitely had some Twitter buzz around it. It opened up at 595, climbed up to 7. So if you got in on the debut and took out profits at 7, that's understandable. You made $1. You could have bought 1,000 shares for $6,000. That's a nice little win. But I did see this pattern show up where it kind of levels out in the 650 to 7. Social media buzz was growing. And I said, okay, well, when I see this formation right here going into, about 2 o'clock range, I decided to take a second play on it at $7 and just wrote it up to 750. Felt confident that it would go up to 8, but, took a quick profit on a midday trade. And I'm trying to look for more opportunities off these IPO plays other than just buying in on the debut or just buying in on, the initial discount dip. And one of the patterns that I've seen repeating itself here is this sort of stabilization play that then leads to a breakout later in the day. And we'll see, we had that a bit on Docs as well. We had this, I can't zoom in on it, but it kind of dipped here, and there was a bit of a stabilization flag right there. And that would have been a good time to, if you'd already sold out once, to maybe say, okay, well, this is going to run again. We see this again and again, and I have started looking at that as an opportunity to buy in. TKNO is another one, low flow, profitable. They sell kind of lab equipment and solutions for over 3,000, medical medicine creators, pharmaceutical, biotech companies around the world. And with such a low float, I think it was 3 million shares or something, 5 million shares, it looked pretty poised to run. And there was a lot of buzz around this as well. Got into 21 or 2070, and you had outs all over the place. It gets a little bit harder on Friday because it feels like these stocks aren't moving as fast as some of the ones earlier in the week. And you sit there going, oh, my wife wants my attention. My daughter, wants to play with me. It's getting towards the end of the day Friday here. So I got out a little bit early of this one, but still took profits, and everyone who was a little more patient had an opportunity to make a really good trade on this one. So let's jump into next week's trades. I've kind of divided this up into 2 slides, the more featured IPOs and then the kind of background players. Doesn't mean that these are the best trades. The background players with low floats can be some of the more interesting and profitable ones to trade, but these are the headliners that everyone should be aware of. And I'm going to skip the first slide and jump to the details because we have about 10 minutes here, 20 minutes here maximum. So Ding Dong Maicai, this is a Chinese IPO that does grocery delivery. They have 10% of the market share. They're SoftBank Tiger Global backed. They're not profitable, and there's a lot of competition in this market. And also, just like Miss Fresh on Friday, they've scaled down their IPO size. And since MF was a dud, I'm going to see if MF recovers a little bit earlier in the week before making a decision to play DDL. Does have about the same float as Miss Fresh, I guess actually a bit lower. But there's a bit of concern about anything Chinese in the delivery market right now, just because there's so much competition, there's regulation, and whereas maybe 2 weeks ago I said, yeah, this one looks really strong. We've had a few duds off the kind of middle tier Chinese IPOs, and there might be other more interesting plays for me this week that I don't want to get hung up on. Ding dong. Okay, we've got Xometry, which is an online marketplace for on-demand manufacturing. They do have growing revenue and gross profits, but operating losses. They are somewhat comparable to 3D Systems, which jumped quite a bit on a partnership announcement last week. There's a very low float on this one, which makes this worth at least doing a little bit more research. But there's other more interesting plays on Wednesday, so I'm not sure if I'll play this one. One of the more interesting ones is Sentinel-1. This is an AI-driven cloud security platform for, to guard against cyber attacks. We've all seen the news recently. We all know cyber security is super hot, and they've got growing revenue and gross profits, operating a loss, which is, I think, acceptable in this market for a growth security software company. Revenue is up 100% 2020 versus 2019. And the float is kind of standard 32 million shares. I see kind of like a low downside to this one unless it debuts at a huge premium. And these types of plays have given win opportunities. I don't expect this to just skyrocket like Docs, but I do see this as a strong one to play and perhaps take a half position to start. And if it dips, double down. And otherwise, just be happy with taking a moderate win on Sentinel-1. Intap, this is a SaaS software for industry verticals, legal, accounting, investment banking. They claim a lot of buzzwords like AI, automation, cloud security, but they're not really a specialist in any of these fields. To me, it kind of looks like a web development company that decided to identify a bunch of key verticals and go out and build all the solutions for giving them websites and web marketing and some software management stuff. And they do have, I guess, 96 out of 100 American AM law, top 100 law firms, 7 out of 10 top accounting firms. But they're not profitable and growth is slowing. So with a float of just 10.5 million shares, maybe it's interesting. I'm not sure it's the most interesting play on the calendar that week, or that day. So I think this one might have to just take a backseat to some of the others, like LegalZoom. Most of us have heard of LegalZoom. They do a lot of advertising, and they handle a lot of, I've set up corporations through LegalZoom. It's about $100 to set up a Delaware Corp or a Nevada Corp or LLC. And they do legal software and services to small businesses. They have growing revenue and gross profits, and they're cash flow positive. So that's kind of the golden triangle of the financials that we're looking for in these IPOs. 27.3 revenue growth in the 3 months ending March 31st, 2021. So we've got strong brand name recognition. We've got revenue growth. We've got profitability. We've got people who have used, a lot of retail investors have probably used these LegalZoom services, and a lowish float of 19 million shares. So this has all the ingredients that I'm looking for a nice IPO play. So my June 30th plays are probably going to be LegalZoom, Sentinel, and I think we've got Krispy Kreme. So we've got a very full, we can't play them all. Otherwise you're spreading your capital out and you're not focused. You want to I try to pick, 2 or 3 to focus on and play those. But I want to review the rest of these at least briefly so you know what else is on the calendar. So the next one is CVRX, and this is a neurostimulation device that already has FDA approval, which is kind of interesting. It's a minimally invasive device that is implanted under the collarbone, and it provides a treatment for heart failure. Basically, like, reads the signals from the brain that indicate that, hey, there might be something, coming up with the heart, stimulates those nerves, and then reduces, the chance of having cardiac arrest or something like that. So basically, they're already ready to start, selling and marketing this. They just need money to, to power that promotion engine. So they're also looking for new applications of this nerve technology. And with a float of just 6.25 million shares, if there's some downtime, or if this one comes to market before the others, the other bigger ones, which is pretty common on a crowded IPO day, lower float, easier to pair up the shares. If this comes to market first, you might be able to pick up a quick scalp on this one and then jump, roll your profits from this trade into some of the other bigger ones of the day. Clear Secure, this one you've probably seen in airports for those of you who have flown in the last couple of years. It's a little bit like the TSA pre-check. Clear Secure allows you to skip the lines at check-in and security, and you cruise right through the airport. This company went bankrupt in 2009 and then was bought out by the current management group and has now made a bit of a comeback. It's also a Robinhood IPO offering, and a lot of Robinhood investors think that this is a great opportunity to buy in. They do have a 30-day lockup, which kind of makes this interesting. If they sell a lot of shares to Robinhood and those shares are locked up for 30 days, that would reduce the supply on the day of the IPO. So we do have some brand name recognition. We do have, a lowish float. We have this little curveball of Robinhood, giving an IPO offering. But again, we have a very crowded day, and I'm not sure this one is going to be the, the play of the day. So probably skipping this one too. Integral Ad Sciences. This is an online digital advertising monitoring and verification, a little bit like Double Verify, which did pretty well on its debut and is up from the IPO price, but it did have a bit of a dip about a week after the IPO. This company has, solid growth. They're operating at break even, lowish float. So this one's kind of like got the right ingredients. I don't know if it has the brand recognition as, like we have in some of the other options for the day. So again, I have to kind of see how crowded things are, where I want to stake my positions and do a little bit more research on this one before it's a go for me. And then Krispy Kreme, we talked about this. Donuts and coffee. If you don't know what Krispy Kreme is, maybe you don't live in America, or you're not, I mean, even if you don't like the food or you're a health nut, you still know what Krispy Kreme is. They also own Insomnia Cookies, which is highly profitable. Revenue surged in Q1 2021, 321 million for the quarter versus 261 million in Q1 2020. They initially IPO'd in 2000. Excuse the typo there, guys. We had a lot to do this week. They went private in 2016, and now they're coming back. Interestingly, back before they went private, they had a very high short interest. They were kind of like the OG meme short squeeze. And so if you're interested in how short squeezes, kind of got turned on before social media and Wall Street bets were a thing, maybe look that up. It's an interesting little side research project. So the funds that they're using are mostly just to cover the debt that they incurred when they pivoted and modernized the business. They're developing kind of more like a direct delivery. They're not making everything just in each single Krispy Kreme. They're making some, pre-processing some of the ingredients and stuff nearby, and then delivering it out to the kind of network distributor locations. And they incurred a lot of debt with that. They built some apps and they have some online delivery stuff. And now they are using a lot of the proceeds from this to pay down, not all of, but much of their debt. Some people have pointed out that some analysts have pointed out concerns over the valuation at 70 times price earnings. I don't think that matters so much when you've just got a stock that is very high on the brand recognition level. I mean, this is one of the leading breakfast fast food type things in the country, and the float is not all that big. So you have 26 million shares. There is a much larger, there's a much larger number of shares that will be available on the market after the lockup period expires in 180 days. So I wouldn't look at now as a great time to buy in for a long position. But Krispy Kreme has enough brand recognition, has enough of a story, has a low enough float for me to say, yeah, this is like the kind of IPO that I'm looking forward to play. DD, this is the Chinese Uber. They actually beat Uber out of China for ride sharing. They got Uber to basically run out of China with its tail between its legs, couldn't compete on the regulations. I think they got some shares of DD as part of it. They also operate in South America. They have a very high valuation, shrinking profit margins, and the float is 288 million shares. So for me, over 100 million shares is already just sort of like, how much demand can there be? So I don't like to play the huge float. Uber was a terrible IPO. Last week we saw YMM, or 2 weeks ago, YMM was another Chinese IPO with something like 80 something million shares, and it didn't do well. When you have that many shares, just what we were just talking about, the demand has to be so high for it to offset the supply. And we haven't seen ride shares do all that well on their debuts. So even though this is a kind of blockbuster name, especially for Chinese investors, if I miss it, I miss it. There's other plays that are more interesting for me on this day. Okay, AMTD Digital has been rescheduled twice now. And this is Asian Digital Banking Services. I don't really like it when something like this gets rescheduled twice. And the reasons are due to market conditions and regulatory pressures from the Chinese government. The Chinese government really kind of killed BABA over the last few months. There's a lot of concern in the sector right now for anything Chinese financial related. And now it's got me, whereas maybe 2 weeks ago I was pretty interested in this one, now I'm a little bit more hesitant. And again, there's other plays that I like better, so probably skip this one now. Aerovate Therapeutics, inhaled dry powder to deliver medicine directly to the lungs, a kind of cardiopulmonary disease candidate. It's just in phase 1, not ultra low shit float. Biotech, I don't understand it, skip it. Acumen Pharmaceuticals, this is sort of interesting just because it's Alzheimer's candidate. Still just finished phase 1. Phase 2 isn't until 2023, so you're funding phase 2 with this investment round, you're going to see dilution before phase 3, and that's going to be years from now. The only thing interesting about this is that everything Alzheimer's has been super hot recently, especially since the FDA kind of waved through Biogen's recent phase 3 trial and gave approval on a drug that a lot of doctors said, I don't know if it's really ready. And you even had FDA board members resign because they're like, this is out of hand. Shares of BIIB went up as high as 60% on the day of the announcement. So Alzheimer's has been pretty hot, but this is really early stage biotech, so 8.3 million shares. It's worth watching it. If it comes out early, maybe I'll play it. I'll just kind of gauge the Twitter buzz on this. Worth keeping an eye on, but not my favorite play of the week either. Atour Lifestyle Holdings, ATAT. This is a Chinese hotel operator that does a special kind of lifestyle branding approach where they work, they develop products and place them in the hotel rooms, kind of like luxury goods, and then allow people to buy them through like barcode or website. And they have a huge amount of rooms. They operate over 70,000 rooms in 608 hotels they own, and then another 575 hotels that they've managized, which is a word I think they made up for managed franchises, other hotels that kind of participate in their offerings. They have incredibly strong revenue growth, 108% in the 3 months ending March 31st, 2021, and a lowish float. But I just don't know enough about this company. I don't know enough about the demand. And again, when there's other things, I'm not trying to play every single one of these. I want to prioritize what are the strongest plays of the day. And I'm not sure this one is going to be the play that I want to jump into, but I'm going to keep an eye on it. All right, D-Market Electronic Services and Trading. It's a big mouthful. It's a Turkish e-commerce platform that sells and develops kind of in-game item trading. As I understand it, there's kind of like the guns and the costumes and the avatar enhancements within games. They have some kind of cross-platform technology that allows, apps and game developers to implement their monetization kind of these, I guess, goods. And it includes some fancy buzzwords like blockchain and DeFi. And they have incredibly strong revenues from 2019 to 2020. The float is pretty large, and I'm not sure that there's enough retail brand recognition on this one to move the needle, but it's an interesting company and has all the right buzzwords. I'd like to see a lower float, but keep an eye on it. EverCommerce, SaaS solutions for small to mid-sized business services, 500,000 customers, profitable in revenue growth, and 19 million share float. This is probably a pretty solid play. We just have a very crowded lineup. I will probably try to get something in on this one and keep an eye on it, but we have others. Torrid Holdings, apparel and intimates for plus-size women. Insert your mama joke here. Market is large and growing, according to their S1. Their net income declined during the pandemic, 8 million shares. I don't know, not sexy to me. No, I don't mean that not to be derogatory. It's not it's just not an interesting IPO for me. Nixoa, we got a wrap.
Yeah, we got a wrap, Matt. Yeah, we got a basic.
Keep an eye on these three: RGCB, MITQ, VRAR. They haven't been dated yet. They are super low float. One of them is a Bosted Securities IPO. I'll send out a newsletter. Go sign up, ipowarriors.com. The newsletter will go out in a couple hours with more details on these. I know that was a lot. Get ready to trade.
All right. Thanks a lot. Matt Hammond joins us every Monday on PreMarket Prep to preview the week in IPOs, ipowarriors.com to learn more. All right, guys, that's a wrap for our show. Money Mitch is going to be live right now trading the open. He'll go for about an hour, and then I will pick up where he left off, and we'll hang out until 11 o'clock until SPACs attack. No David Green this week. He's got his his boot camp for his private subscribers. So everyone, please remember that all the information from our show is meant to be used as informational purposes, not for investing or trading advice. Thanks to our guests Tim Quast and Matt Hammond. Thanks to all of you in our chat. If you could drop us a like, I would greatly appreciate that. And subscribe. There's our bell. That's my cue. I'm off. Money Matrix on. This is going to redirect straight to that. Everyone have a good rest of your day. I will see you in about an hour.